following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that music can only mean one thing. It is time, yet again, for the old Option Block. My name is Mark Longo from the OptionsInsider.com, as well as most of the programs here on the old Options Insider Radio Network. And I am joined today by a veritable cavalcade of stars, starting off with the man known to many as Monday Mike, though some of us just call him Jim. He is Mike Cavanaugh of Know Your Options, Inc. Monday Mike, welcome back to the show, sir.
Thank you very much. Great to be here. Always a pleasure. I like that moniker, Jim. That's fine.
That'd be a good one for your clients. You can call me Jim. But, of course, listeners, if you haven't had a chance to check it out yet, you should check out Monday Mike's / Mike Cavanaugh's latest adventure on the old Options Insider Radio Network. He is indeed holding down the guest host seat on our latest show, The Advisor's Option, which went live last week, and we should be launching the independent feed for that program in iTunes shortly. So if you haven't checked it out yet, by all means, check it out. It's great for the financial advisors out there and the registered investment advisors, as well as those of you who are clients of financial advisors and perhaps want to jog them a little bit into using more options and derivatives in your portfolios. And, of course, we are also joined by the man holding down the Options Express hot seat today. He is an infrequent guest of the show, but it's good to have him back. Good old John Grigus, the major domo over there at Options Express.
/ powered by Schwab.
Yes, he's a Schwabi now. He's a Schwab.
They're the ones keeping the lights on here. But no, it's always good to be here. Good to see Michael Cavanaugh and Sebastian. I haven't seen Sebastian in months.
I know. I've been busy, but I'm back. Don't worry, I'm back. So
yeah, he's back, and that voice, of course, is the Seabass, aka Mark Sebastian from OptionPit.com, doing double duty on the old radio network today. An unusual feat for Mr. Sebass, but welcome back to the program as well.
I was neglecting my job as co-host here. I mean, Andrew's great, probably better than me, but which is maybe the reason why I'm here now. I was starting to, they say
Andrew getting too popular out there.
Yeah, exactly. I got to keep a good man down. That's what I'm saying. So no, I'm just kidding. No, it's nice. I'm back from a nice long weekend in New York, and excited to have kind of the trifecta of awesomeness here with me.
It is indeed the trifecta of awesomeness. And Andrew is a great stand-in. Of course, he is a wee bit deficient in the uncomfortable analogies and 80s references department. So I hope you bring him up to speed in that shortly.
Well, the funny thing is, if you get him on the 70s, you're good to go, though.
Ooh.
Oh, really? So he goes back a wee bit of a ways then.
Well, he's got a few years on the average guy in this group, I believe.
That's
I
true.
mean,
Plus, he is
you're what 38, something like that.
he's a Portland.
36. But yeah, same thing.
Yeah. So,
You're
I don't like to
you're what
share
74
personal
over there,
information on podcasts.
78,
Gotcha.
something like that.
If you see me out at the bar, I'm 29 and a half. Yeah, to the ladies out there.
lovely.
And I hope John's wife is listening to this one. And with that, we are going to roll right into the trading block.
The trading block.
All right, and those clanging bells mean it's time once again for the trading block, and it was a strong day to the upside, perhaps not as strong as when it initially started off, but yet all the major indices closed up about 1%. S&P closed up nearly 13 handles at 1257. The Dow closed up 78 to nearly 12,100, 12,097. And then the NASDAQ closed up nearly 29 handles to 2655. And the good old VIX cash also up on the day, up 0.17 to 2769. And perhaps we'll start there, and that seems to be one of the stories of the day, which is, of course, the ever-vacillating VIX cash. It was up, it was down, it was left, it was right today. It was an intriguing day for the VIX watchers out there. I believe it got as low as into the 26 handle at one point today. So those people who have been leaning to the south in VIX were happy with today's action. But then, of course, we closed up again as people probably started picking up. Even though we're moving to the upside, there still is a hunger for downside protection. There still is a hunger for insurance out there, as evidenced by today's activity in the underlying. Mr. Sebastian, what caught your eye the most in today's vacillating VIX?
Yeah, I mean, I'm the up day with the up VIX is not something I really like to see ever. And I'd been in a pretty decent, I'd been kind of getting more and more bullish, even with the VIX not reacting quite as much as I was expecting this morning. But what I liked was the fact that despite the fact that we were trading, around 1260, VIX was actually a lot lower than when we touched our recent highs. End of the day, we got right back in line. So I'm still a little bearish bullish the market here, but a lot less happy with what I'm looking at. And everyone's talking about the 200-day moving average, how it bounced off the 200-day moving average. And, we did, but because everyone's talking about it, I'm sure we're going to go right back through it. That's my theory.
That's my theory on pretty much all technical indicators like that. Is the more widely followed they are, you get a bump off of them. But that's pretty much the major relevance they have, is that everyone and their mother is watching them. If you can have an indicator of waffles and eggs, and if there was some ratio you could compare it to the S&P, if everyone followed it, the waffle and egg indicator would be relevant. So yeah, today we did bounce off the moving average. Looks like the VIX actually had a low today, VIX cash of 26 even.
Mm-hmm.
So
it did.
Barely almost got into the 25 handle, which I'm sure had you salivating, Mr. Degenerate Short VIX.
I know.
It's been a long time coming, but it finally has starting to pay off all those stalwarts and perhaps even stubborn folks who have been rolling their positions ever since the great debt debacle of earlier in 2011. Of course, speaking of debt, we were indeed, again, the market rally today was, let's say the S&P put a damper on it today when they came out and warned of potentially downgrading Germany and some other names in the Eurozone in the near future, and that took us off the highs of the day. We were actually down quite a bit more throughout the day, but we ended up gaining back some of the upside we saw today. Mr. Grigus, what really caught your eye today? I know a little birdie told me that you've been really active in our old friend Groupon of late.
Well, I was sitting on the fence with Groupon, and I know about 2 weeks ago, Michael Kavanagh, he agreed with me, and since he's one of the top 3 advisors in the country, I was like, I gotta put this trade on. He gave me the push to put on some cash secured puts, and that's the only way I was going to do them, because I'm either going to be wrong and I'm holding these till they go bankrupt, or or they're going to expire worthless, and I'll just keep the premium. So about 2 weeks ago, I sold the cash secured 17 puts in there, and was sweating it a little bit there because Groupon has now turned into a 10% move day, pretty much. If you look over the last week and a half, it has a 4 to 9% move, one day or the other. It's pretty ridiculous. So if I thought those premiums looked good 2 weeks ago, they've only improved over here the last couple of days. But I'm looking like I'm out of the hot water for the time being. But it was not looking good literally only 6 days ago.
Yeah, it's been a sweater to be short premium in this one of late. It got down, you're right, into the 14 handle range for a while. I'm looking at 1485 is the
1485. And I was at home watching. I took the Wednesday before Thanksgiving off, and I was, of course, on your day off. What do? You turn on CNBC in the morning and stare at that thing for 3 hours. And
That's
they had
very
the analyst
healthy,
on
sir,
from Susquehanna, and the television reporters, you could tell, had a view of Groupon where they were going to pound it into the ground, say how bad it was and how this type of business model is dead and they'll be bankrupt. And the analysts kept coming up with talking points that said, hey, 75% of the businesses come back to Groupon. There were two other things. They said that Groupon and Living Social account for 80% of the daily deal volume in the marketplace. He had a talking point that would counter each one that they said. So I stood up, logged onto my account, fired them off, and doing all right so far.
If you're not sweating, you're not trading.
Yeah, I mean, the reason you come back to
that.
trade is because it gets the blood pressure going, it gets the heartbeat moving.
Sure.
Yeah, but that is a good primer for a lot of our listeners in trading low float IPO names, because they do tend to vacillate to the extreme, as Groupon has shown us over the past few weeks, where it's just been all over the board. It was trading, got up over 30 back in about a month ago, and it's ever since then has been on a generally downward trend, except for the past week or so when it started to bounce back. I think the market heard that John G was indeed short, and so they decided to take pity on him and bounce it back up to the upside. But yeah, I don't know long term where I'm leaning here. I know Uncle Mike is perhaps a bit more favorable of some of these Web 2.0 stocks than I am. I'm sorry, Monday Mike.
Yeah, so some of the analysts out there, they got recommendations of $32. I mean, we're half that right now. Buy.
Maybe they just keep talking it up, baby. There you go. It's got to go north. But yeah, these guys probably haven't even changed their recommendation since the IPO. They just left it there, hoping that it'll all come out in the wash. Mr. Monday Mike, what has been catching your attention in today's bizarre markets?
I've got two that have caught my eyes. I don't know if Mike Tusa has ever gone over in the strategy block. We've got a little strategy that I like to call the Wheel of Fun. Our latest candidate for the Wheel of Fun
intriguing.
was ARCO, ARCO. It's the South American breakoff of McDonald's. A couple months ago, we sold the Nove 22.5 puts for about $1.50. Ended up taking assignment of the stock. And then we came in and sold the January 22.5 calls. Stock's trading at 22.25 right now, and it's the Wheel of Fun. We sell a cash secured put. If we don't get assigned, we keep the cash. If we do get assigned, we come in, go 2 months out, and sell a call. So, in the last couple of days here, two more Wheel of Fun candidates have popped onto our radar. Dollar General, DG, like it.
We know Tusa loves that one.
Yes. It's actually a pretty good story. They've got an accelerating earnings over the last 3 quarters. It went from earnings of 14% to 24% to 28%, and it's been accelerating. We like it. It's a pretty stable stock. So what we'd be looking at there is going out to February and, looking at the 38 puts, selling those. I think you could get about just over $1 for the February 38 puts on Dollar General.
Yeah, they went out a buck at $1.15 or so. So yeah, you can get them for a wee bit over $1.
Even better, under promise, over deliver. That's what we do here. If you don't end up owning the stock, great. For a cash secured put, you're looking at, you got to put up, if you sell the 38 put, you have to put up $3,800 for every contract that you sell. That's the way we do things. So you take in $1.15. I like it. If you don't get assigned, do you then go in and buy the stock, or do you want to get long the stock only by being assigned on a cash secured put? So do you write another put 3 months out? Yeah, we would go another 2 months out, assuming the stock fundamentally. We got Dr. George over here looking at the stocks for us. So if it's still on George's radar, we'll just do the same thing. We'll go 2 months out and sell another put. So it's more of a a yield play. If we end up owning the stock, we're going to sell the at the money call 2 months out. We're just interested in trying to cultivate a yield with volatility where it is. We think we've got a good shot at facilitating those yield hungry investors out there while you're clipping out some of the day-to-day ups and downs in the market.
I like the name, Wheel of Fun. It is
the Wheel of Fun.
A very appropriate name. If you're doing it in Groupon, it might be the Wheel of Pain right now, or the Wheel of perhaps Anxiety and antacids.
The wheel's just spinning a little faster with Groupon. It's
the Wheel of No Sleep.
The merry-go-round of stomach pain.
Yeah.
Are you still watching LinkedIn too, or have you moved on from that?
No, we stopped looking at LinkedIn. That got kicked off the Wheel of Fun. It was like the little kid on the merry-go-round that was sticking his tongue out at us, so we kicked him off the ride.
Yeah, you were dancing with it up in the 90s, and then you wisely decided to not dance any longer, and it has never really looked back.
The other one we like is GNC, the nutrition and wellness store.
Yeah, I'm constantly amazed these guys are still around.
I forgot, Warren Buffett. George told me, don't forget to mention this if you talk about Dollar General. It has surpassed, the dollar stores are part of a national shopping habit. And as of mid-year this year, the combined store count for the top 4 dollar stores, Dollar General, Dollar Tree, Family Dollar, and 99 cents only, have surpassed the 3 biggest national drugstore chains, which are Walgreens, CVS, and Rite Aid. So the dollar stores have surpassed in sales the 3 largest drugstore chains. Thought that was I know, interesting point.
I know the Tucson Brood are all buying their clothing and whatnot at the Dollar General store and have been for some time, so that alone should really put them into the black for the foreseeable future.
Yes, very, very much so.
Good old Uncle Mike, not here to picking on him when he's not here to defend himself. But that is interesting. You hear these anecdotal things about these dollar stores and these cheap retailers faring well in this environment, but it's interesting to see some actual numbers behind that people are indeed flocking to these things. You can't get enough $1 who's its and what's its and gizmos. It's a great place. Especially if you have a kid, you go in there, get a couple dollar things, and he's happy for a week.
Yeah, well, it is definitely the age of austerity. I mean, if you look at Groupon, Groupon's basically a play off of austerity. People are trying to save money. I'm not going to go buy this, even though I still believe Groupon has created a mercenaristic, predatory group of consumers. It's still playing off of austerity. So these dollar stores passing up the largest national drugstore chains, I think, is pretty impressive news. That it used to be, all the raggedy-looking people that were going into these dollar stores and coming out with $1 spatulas. I mean, people are now shopping at these places as they're trying to save money.
They're pulling up in their Beamer and they're picking up their $1 spatulas. That's what you're saying?
Exactly. or whatever it is,
And you also saying you like GNC here, huh? That's
yeah, we do.
I can honestly say I can't remember the last time I've shopped in the GNC, because that could also speak to my own personal health lifestyle as opposed to anything else. But yeah, you see them. I guess you still see them in malls here and there. But I guess there is. You guys think there's still a lot of upside in the high end supplement market?
It's they've got 7,400 worldwide stores. So they're not click centric. They're bricks and sticks, which might be a negative sign, but as long as they've got 7,400 stores, they're planning on opening another 200 stores next year, both company owned and franchised. And another kind of Wheel of Fun candidate. The stock's trading at $27.50, $27.69 is where it closed today. You don't have to put up a huge amount of cash to do the cash secured put. We look on this, and I'm just pulling up the chain. I didn't write down before I got on the show here what we'd be looking at doing with GNC, but definitely a Wheel of Fun candidate. Its growth its accelerating earnings aren't as impressive as Dollar General, but it still has accelerated earnings, and the forward estimates are very optimistic.
Yeah, I would think these times would have been hard for GNC because they're not. You don't exactly walk in there for a bargain. At least not usually. Most of the things are relatively pricey for what you're picking up there. But I guess maybe if people are still devoting assets and resources to healthcare and their own maintenance of their own health, and I suppose GNC could do well going forward.
Yeah, and this one, there's no February chain on it, so we'd have to look do you go to January? Do you go to March? But on the March 25 put, it's $2.69 out of the money. It's $1.10 bid offered at $2. You might be able to get $1.50 for the March 25 puts. If the stock goes down 10%, you're at the money. So I like GNC and the Wheel of Fun. So there's 2 Wheel of Fun candidates for you.
There you go. 2 very fun candidates. And I think with that, we're going to close out the old trading block, and we're going to roll right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and listeners, you really need to tune in to the pre-show and the intermediate sessions here on the live show, because it's all sorts of fun topics being brought up here. And of course, welcome to the Odd Block. This is the portion of the show where we break down the interesting and or the unusual and sometimes the downright questionable options activity that is lighting up the tape today. And we're going to kick things off with Angie's List, ticker symbol ANGI. This goes very well with what we were just discussing earlier. All these Web 2.0 names floating around. Angie's List, of course, the options have been around for about a week or so a very new entrant to the marketplace and a new entrant to the odd block as well. Ticker symbol ANGI closed at $13.63, down about 38 cents. And so far, this one hasn't really been lighting up the options tape. Granted, it's only been around a week. It's been doing about 500 contracts a day. They did a whopping 4,000 today. The bulk of that was in one relatively sizable, at least for Angie's List, call sale. We saw a trader coming in and dumping nearly 1,000 of the Jan 2012 17.5 calls for about 90 cents a piece. But yeah, so about nearly 1,000 of these Jan 17.5 calls being dumped for about 90 cents. But yeah, so obviously this guy's thinking Angie List not running anytime soon. Probably someone who owns the underlying and looking to generate a little bit of bump against it. This name went public about a month ago, and it IPO'd at $13. Spent most of November trading in and around that, ended November actually below that $13 IPO price, and only recently in the last week or so has it started to edge over its IPO price again. This guy obviously thinking that it's not going anywhere north of 17.5 by next month, and so he's taking a little of his money off the table, putting a little premium in his pocket for his underlying position, I'd wager. Any of you guys been watching Angie's List? I know, Monday Mike, you're a big fan of these Web 2.0 names here.
Yeah, no, I haven't been watching Angie's List. I'm still trying to figure out if she's related to Craig before I trade it, jump in and trade the options.
It is very incestuous in the Web 2.0 world.
Angie and Craig
in a world where Angie's List is related to Craig's List, I guess she'd be what? Rating hookers?
Oh man.
And this is why this is what you bring to the table that Andrew does not, sir. Right there. That quality type of comment which our listeners have come to know and love.
Yeah, stay away from Chuck's hooker service. He's really a serial killer. Thanks, Angie's List.
Payment
No,
plans.
I do like their service. They a lot of service professionals swear by it, and a lot of people pay a lot of attention to their ratings and how they're viewed on Angie's List. So I think it's a viable company. I don't know, if this guy's long the stock and he sold the Feb 17.5 calls or the Jan 17.5 calls, but it looks like in January there was also some action in the 17.5 puts. They went up about 300 times. I don't know if that's a combo, somebody playing the short side here, but I like Angie's List, the business in general, but I haven't been watching the option chain.
Grigus, you're the degenerate Web 2.0 put seller here. What's your feel here on Angie's List? You gonna start hitting some puts here as well?
No, I mean, I don't know anything about Angie's List, as just the opposite of Mike. We do get a lot of calls on the retail side about IPOs because for for some reason, I think people think those are more exciting. There's more opportunity in the days of the .com where I'm going to make 50% today. So we had a lot of calls about it. This one less than Groupon, LinkedIn, and the rest of them. But I don't know anything about it, so I'm going to stay away from it. I might start selling LinkedIn puts as that thing has gotten crushed, but nothing in Angie's list.
Speaking of weird activity in Angie's list, when we detailed the call sellers, there's about 1,100 of the 17.5 calls went up. Also, it looks like and you mentioned the 300 lot of the puts went up, so someone savvy legging into the put side of that equation, perhaps. But also, we saw it was about 1,700 of the 1,700 of the Feb 7.5 calls went up today as well. The bulk of them buys for prices around $7.50 as well. So some deep in the money call buyers coming into Angie's list as well. So the paper was really across the board. Maybe this guy was legging into some sort of bizarre diagonal time spread here.
Maybe it was like a tax trade.
Yeah,
that's what it looks. It looks like a diagonal time spread. You buy the Feb 7.5 calls, and he's financing part of that purchase with selling the Jan 17.5s.
Yeah, for some reason our contributor didn't write up that portion of the trade, but you can see it went up here on the 7.5s in Feb. So perhaps a little bit more savvy on the options side for this trader than we initially led on. So moving on from Angie's list to one of Sebastian's old and dear favorites, Darden Restaurants. They closed today at $47.73. Up about 20 cents. This is the name that does about 1,700 contracts a day. They did 6,500 today. And what we saw was Darden just getting in some nice lift over the past few sessions. It's up 7% actually over the past week, roughly. And despite that run, people are thinking there's more upside to be had here in good old Darden Restaurants. We had a trader coming in today picking up 2,300 of the D's 50s for prices in and around 35 cents. And
I was actually in a Darden restaurant on Saturday night.
That would not surprise me at all, given your love of Darden. I forgot what episode it was where you really went to town on Darden.
Oh no, it's Red Lobster and Olive Garden. But most people don't know this, but Darden actually owns Capital Grill as well.
Oh, I am a fan of Capital Grill.
Yeah, that is where I was Saturday night. I would never, ever, ever step foot in a Red Lobster or an Olive Garden. Olive Garden, I mean, folks, if you're going to go to Olive Garden, go to the store and buy the cheapest box of wine you can buy, and then go get you and your date a can of Chef Boyardee. You'll have a better meal, and you'll have a cheaper meal. All right? And tell you what, get some candles, light a fire, get a bearskin rug. Hey, you don't have to drive yourself home before you lead toward kind of the end of the night activities.
The bearskin rug. I can just picture the Sebastian Pleasure Palace in my mind as all this is going on.
Bodies, a little nice Chef Boyardee, and a box of wine. Who wouldn't want that?
I think the old.
We all know you don't go to Olive Garden for the food. I mean, it's the only restaurant you can find rollers on the bottom of the chairs. I mean, the comfort of the seating arrangement is why I thought everybody went to the Olive Garden.
Hey, unlimited salad and breadsticks, baby.
Yeah, salad. I love it when people are like, "Oh, the bread's good." Name bad bread. All right, you know what? You go to the store and you take a loaf of Wonder Bread and you heat it up in the oven in a wet towel, and then you eat it. You will be like, "Oh, this bread's so good." Bread is inherently delicious. That's the thing people don't realize. You take butter, you take bread, and it's warm. Everybody loves it. I'm sorry. Olive Garden, your red sauces are awful. Red Lobster, your seafood is gross. I'm sorry. And my wife, she loves the dockside chicken. I'm like, you go to Red Lobster for the chicken? Seriously? That's like going to Ponderosa for the chicken.
So
I am a fan of the Red Lobster heated biscuit.
The biscuits, I will say, are ridiculous, but that's
the biscuits are the best.
I guess to your bread points.
Biscuit.
No, it's got garlic and butter and something else in there that's special.
You know what, John? You could tell you what. You want a nice garlic butter biscuit? Tell you what. Go to the store, pick up some Pillsbury Grands. All right, then roast a little garlic in a pan and put some butter over it, and then pour it over those once they're done baking, and you'll have a better experience without having to have gone to a Red Lobster.
See, this is what we were missing before: is the tangential rants, which make the odd block exactly what it is. Yeah, odd indeed. So yes, DRI, good old Darden Restaurants. In case you missed it, Sebastian is a big buyer of upside here in DRI, and he thinks that this guy has a good shot of breaking past his 50-35 break even here by a couple months. Of course, last time DRI traded this high was back in early August, so it's got a while, and these next earnings is actually a couple days after these calls expire, so this guy's not getting an earnings pop. So nonetheless, a big upside scooper here in Darden. And then moving on to American Eagle, ticker symbol AEO. I know Sebastian loves to get his tween outfits here and whatnot.
I was trading AEO today.
Your capri pants, you're a big buyer of those, I know. 6,000.
I'll talk about what I saw here in a second, but I know what trade you're going to go through.
Yes, the 6,000 lot. This is the name that closed at $14.60.
There was 30,000 of them, Mark.
We're getting there. You're getting ahead of me.
All right.
Name closed at $14.60, up about 43 cents. This is the name that does roughly 6,000 contracts a day. They did nearly 40,000 today. And of course, a lot of this love was coming out of the analysts, and we could save our comments on the analysts, but they were heaping love upon AEO today as everyone was upgrading it across the board at BMO and Morgan Stanley and others. Stock gapped up at one point today about 5% before settling down around the 3% level. Nonetheless, we saw some upside call selling here, particularly on the Jan 2013 17 strike. Looks like we saw a total of, I'm looking right here at, unless these went up yesterday. They didn't go up yesterday, did they?
Yeah, no, it must. The AEO trade was a buyer. I'll tell you what the AEO trade was.
I have it written up here. I'm just trying to see why it's not showing up in the activity today. It's kind of weird.
Yeah, no, an AEO,
Jan
the
13,
trade,
17 calls, looks like, right?
Yeah, no, a guy bought 27,000 of the January 2013 17 calls, and he actually sold them.
That's what
so that was the buy right. It was he sold the Jan 17 calls against kind of his position, and in the process absolutely decimated the implied volatility of the options, basically in front of every single month in front of Jan 2013 just got destroyed today. And you've got implied volatility of AEO options now trading near 2-year lows. So what do you think I was doing today, guys?
So you were hitting every bid you could possibly see then, is what you're telling us.
Yes, I was hitting every bid. No,
sold to you, Sebastian. No, so you were scooping up some cheap vol and gamma here.
Yeah, we did a couple of things. I actually bought the Jan 17 calls for $1.20 after this guy sold them down, and then I bought the January 14.5 straddle paying $1.50.
And you did it all the same month, all Jan 2013?
No, I did the Jan 2012 14.5 straddle for $1.50 because. If you take a look at one of the things I'm a firm believer in, and this maybe sounds dumb, but if I'm looking over a time period and I can buy a straddle with 40 days to expiration that has less juice than the underlying has moved in the last week, I consider it a buy, unless there's some sort of cash buyout or something along those lines.
It is interesting to see these names that are relatively lightly traded, and AEO does about 7,000 contracts a day, so it isn't particularly heavy, and how one size trade, even well over a year out, can just crush that curve across every month because there's just you guys dumping 30,000 contracts. You need to get that back somewhere, and these market makers are heading for the hills everywhere else as well. So you're right, it is a premium buying opportunity if you are so inclined out in AEO. Particularly if you are want to scalp and put on some spreads and not just come out naked buy, as we are always saying here on the show. So yes, interesting activity in AEO. And we're going to close it up here. Quick call back to RIMM. I know Andrew, your buddy there, Mr. Sebastian, was loving our RIMM talk from last week where there was someone came in, a bunch of people came in actually, and were just scooping up flyers left and right in RIMM, many of them with 1 day to go. And people were, if you remember from last week's show, people were gobbling up the December weekly with 1 day to go, 18 and 19 calls for about 45 cents and 16 cents. About 1,000 of each of those went up Actually, 3,500 of the 19s went up, so those were just complete flyers. All pretty much 4,500 of those calls went out worthless. The stock just never looked back from those levels. It traded as high as 1877 on Thursday, and then never looked back on Friday. Got down to around 1660 or so in the during the day on Friday. Of course, the people also loaded up on weeklies that expired this week. The DEES 19, 20, 21, and 22 weeklies all were picked up, about 1,000 roughly on each strike for prices ranging from 50 cents up to 39 cents on the 20s. I don't have prices for the 21 and 22s, but needless to say, these are substantially upside, substantially near term, substantial flyers. Not looking like these guys have much of a prayer of paying off. So just like to go back and highlight these ones every now and then. We tend to talk down doing this and scooping up lottery tickets, especially with a week or one day to go. It looks like this guy thought something big was happening on Friday, and it didn't really play out for him. So we'll keep an eye on RIMM through the rest of the week, but not looking too good for this lottery ticket lover here in RIMM. And that is going to do it for the old odd block. And now we're going to roll right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, a portion of the show where Mr. Grigus takes the reins, and Mr. Monday Mike and I and Mr. Sebastian sit back and nod our heads approvingly. So, Mr. Grigus, what is going on in the land of OX that is interesting and or intriguing to our listeners, sir?
Well, this thing that the Van Eck is doing, they're doing a exchange on the ETFs that they manage. There's 6 of them, the most notable ones, OIH and SMH, that we've actually been having a lot of discussions with operations and risk and our counterparts over at Schwab to see how they're handling it as well. And what it boils down to is that they have an offer out there that is not mandatory. They're going to allow people to decide if they hold the stock, they can exchange it for the new ETF. Seems pretty straightforward. If you don't, tell your broker-dealer, Options Express or anywhere else that you trade, that you want to participate in the exchange, and they're going to trade under the same symbol. So it's going to be real confusing on December 21st when OIH and SMH and the other 4 start trading under the same symbol, and they say, hey, why isn't my price updating? Well, they're going to do a cash distribution when they do one of 2 things. They're going to allow people to take on the components, so big prime equity and institutional services will probably take all the individual components that make up the ETF. And then once they take them and they sell them and the fund sells the rest of them, they're going to put out a cash component and settle the stock or the ETF at that price. The problem is they're going to give themselves 4 months to sell it off. So in the meantime, you're going to be holding that stock position. You're not going to know what price you're going to get, and that price won't be determined for 4 months. And speaking with Van Eck and OCC, it sounds like they are going to take the full 4 months to determine what the closing price is going to be. Now, if you have options, that makes it even funner, because if you take a look at any of the options in OIH or SMH trading past December, you could see that they literally have very little time premium. I was actually looking at selling puts in long-dated options because these eventually will be cash settled at a price I don't know, but I would close them out before December 21st. The problem begins when you have these options is, what if you have a covered call? Okay, so you have a covered call. I say, hey, call me a broker-dealer. I want to participate in this exchange. Well, the short call, is not going to be covered anymore once you do that exchange. So we are not allowing, as well as Schwab, allowing people to participate in that exchange if they have calls written against one of these ETFs. Also, they were nice enough to make this exchange offer on the 20th. The morning of the 20th actually ends at about 10:30 Eastern, right on the expiration weekend. I mean, they have all these weekends they could pick, all these dates, and of course they pick it for that weekend. So if you get assigned, or say you're in the money call and you have the money and you're like, I want to hold this stock, I want to take it for the long term. Maybe it's against me a little bit, and you let it go through expiration because it's in the money and you'll be automatically exercised. Well, with a 3-day settlement, you're not going to qualify for that exchange offer. Your stock's not going to settle until the 21st, and by that time, it's going to be too late. And if you're, finding out about it on that weekend, you're pretty much already going to have to wait 4 months to get the cash settlement price. We have gone ahead and emailed all of our clients that hold positions in there. We also have a note up on the site when you are on the order form for any of these 6 ETFs, but we're still fielding calls of people not realize it until they bought it that these options are going to pretty much be really hard to get out of over the next 3 weeks. And if they had known otherwise, they probably would not have gotten into it. So speaking with people in the industry, I've never come across anything like this. I don't know if Mark or Mike, if you have seen this type of offer where it's not mandatory and where they wait 4 months to do a cash component settlement.
This is unique in my experience that they're offering you an exchange, but you're right, it isn't mandatory. They're taking their sweet time to do it, which of course leaves all sorts of uncertainty out there, particularly on the options side. If you're trading anything past front month, you don't know what the heck's going on here. Yeah, this just rings all sorts of
retail
bells.
screw job. I mean,
yeah.
And if you go on the OCC website and you read some, they have actual here's ways you're gonna run into some trouble. I mean, they actually have examples. I read a lot of these OCC memos, like half a dozen a week on splits and corporate actions, but I've never seen them give up examples of how you're going to be in a bad situation if you don't, pretty much close your option position prior to the offer. Yeah, it's very difficult for the average retail because I've struggled with it over the last 2 weeks, but I think I have a firm handle on it now. And what we've pretty much been advising people, but we don't advise people, we encourage them, is pretty much close out of those options. Because the new ETF, like I said, will be trading on the 21st at 10:30 Eastern. OIH, SMH, and the other 4 will cease trading. I talked to the OCC because this is a new issue. They really don't have a timeline on when those new options are going to be released, but I have to think it's similar to an IPO where it's about 8 to 10 business days. But difficult indeed.
Yeah, this sounds like a screaming example of just get the heck out of Dodge. If you don't need to own this thing, and I can't imagine why you would, just wash your hands of it. Take off the options positions, and this is an extreme level of uncertainty you're going into for, I don't know, precious little reward. Unless you're some market maker who really has an extreme handle on what's going on here and feels he could squeeze a little bit extra juice out of this thing. I just wash your hands of it completely.
They put warning labels on packs of cigarettes for a reason. Same thing here. I mean, if there's a warning label on this, I would agree with both of you. I mean, when in doubt, get out.
Yeah, when OCC is warning you to head for the hills, they're not exactly prone to hyperbole over there. So when they're warning you to do that, you might want to heed that warning.
Yeah. So if you're owner of one of these ETFs, you will be hearing from us on the 20th via telephone and email. So gotta make a decision because once it's late afternoon late morning, early afternoon on the 20th, that offer is already done, and it's gonna be too late to say, hey, I wanted to get out of these. But that's it on that Van Eck thing. One of the things I wanted to also talk about real quick, and we'll run a little bit long, but since Mike is here, I wanted to ask him a question. I see a lot of my family around the holidays, especially this time with my extended family kind of coming in from the West Coast, and I was talking about their advisors and how many of their advisors use options and they're kind of went glossy and glass-eyed when I said the word options, and they're like, oh, options like buy and sell, and I'm like, no. So, Mike, I'm curious, how many advisors out there use options, in a client's portfolio?
It's a good question. The OIC they released a study on this not too long ago. I think what the OIC did is they defined what an advisor is into a couple of different tranches. And one of those tranches being an advisor to the affluent versus just having a Series 65 license and being an advisor. So the numbers were shocking. The affluent advisors, I think, were in the 90%. Like 90% of affluent advisors are using options in some capacity. Then the numbers drop off, and I don't remember what the exact numbers are, but if it's a typical, like a traditional advisor, a wirehouse advisor, it tends to drop off because they're not really involved with the management of the money. If it's a client relationship manager of a non-affluent person, I would assume those numbers are probably low. But the OIC study found that affluent advisors that have more hands in the investment decision making, they're using options and they're using them a lot.
That's surprising. Yeah, I thought it would actually be a lot less, but that's
Those numbers
amazing.
actually surprised me quite a bit too. OIC released that study back in the OIC conference in Savannah in May, and I found them to be extremely surprising. In fact, if you want a detailed overview of that study, by all means, tune into the first episode of the Advisor's Option, which you can find here on our Options Insider Radio Network and in our main network iTunes feed, and shortly on its own feed in iTunes as well. And Eric Cott from the OIC Advisor Initiative discusses that study in depth and how surprised they were to actually hear some of those findings, because up until recently, those numbers were relatively anemic. I mean, the penetration of options with advisors of any stripe, any way, shape, or form was nothing. It was very, very nascent in the advisor realm, and they're starting to pick it up, but nowhere near the numbers that you'd think people who are primarily long only should be, at the very least, writing covered calls and buying protective puts, and not many of them are still even doing that. So there's a lot to be done in that scenario and a lot to be done in that area in terms of educating those guys, which is why we have launched the Advisor's Option, and we're working on episode 2 as we speak, so everyone out there should stay tuned to that. All right, Mr. Grigus, thank you for that compelling stuff as always, and by all means, if you're touching any of those stocks / soon-to-be ETFs, by all means, get the heck out of Dodge. What are you doing? There are other fish in the sea, quite literally, in that sense. All right, that is going to do it for the Xpress Block, and now we're going to roll right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we gaze into our trading screens and see what's coming up in the murky ether of the markets for the week to come. And, of course, it's a relatively light week on the economic number front. We have jobless claims on the 8th. We have Michigan sentiment later on this week, and we always know on this show our sentiment is always sold Michigan. And then aside from that, not too obviously, everyone is still watching the ongoing kerfuffle out there in the Eurozone, where we saw S&P's warnings of a potential downgrade to Germany and a few others out there today really put the brakes on the markets today. If they do go through with that, it'll be interesting to see if everyone who has suddenly turned bullish on this marketplace continues to hold their bullish perspective. I even caught Sebastian being a little bit bullish today on one of our earlier shows. I said, "Who are you? What have you done with Mark Sebastian?" I can't remember the last time you've actually talked up the market, unless you're talking in a pure vol perspective. But yeah, so it'll be interesting to see how this plays out. Of course, we did mention earlier in the show in the odd block RIMM. We did kind of a review of RIMM from last show, and there is RIMM's earnings are coming out on the 15th, which is of course a little bit of a ways from now, but still interesting one to discuss because we have discussed it a few times on the show recently. There has been a lot of takeover chatter around this name. Of course, if you've been watching RIMM or trading RIMM pretty actively, you know this past quarter wasn't exactly the best for them. They had to write down a lot of revenue off their tablet sales because they were pretty much blowing them out the door at a couple $100s a piece when they're supposed to be selling them for $500, and a product that was supposed to be the most significant new product for RIMM since the BlackBerry launched over 10 years ago has suddenly been just put to pasture with a quiet whimper. So that doesn't really leave much hope for the future of this company. And I know, John, you're interested in RIMM, and there is a lot of interesting speculation about whether people are talking about buying it for the company itself or for the stable of patents. We all know patents are quite the hot commodity in the tech land these days. Just look at MMI a few months ago, and Google gobbled them up, and just for their patents alone. So there is a lot of speculation here that people could be coming to play in RIMM for the patents. Either you guys, John or Mike, keeping an eye on RIMM right now?
Well, yeah, at Options Express, we had a lot of people looking at it. They like to have their earnings play, and since with these, this RIMM does have weeklies, it's one of the 80 or 90 weeklies out there. The trade I was considering, because I have a slightly bullish sentiment towards their earnings next week. I just, we spoke earlier in the show that when everyone thinks one way, I kind of start to flow towards the other way because it's too obvious or the contrarian thought process. But I was looking to buy the 17.5 December ones, which expire the day after the earnings on the 16th. And then write some weeklies in front of it to kind of pay for it. And I just thought maybe I'd get the Mark and Mike viewpoint and whether they think that's a good strategy or not.
So the regular D17 halves and then writing the weeklies against it going into the earnings.
Yeah, I was just thinking we're right in the D17s. They don't have any half ticks on the weeklies, but pretty much cutting in half the price of the 17 halves.
I don't know, short gamma going into the this earnings announcement. Usually I tend to like to lean short going into earnings announcements just because 99.9% of the time that's the preferable way to go. Of course, RIMM is such a oddly uncertain beast. Look at last week. We literally had people last show on Thursday. We were talking about that activity we discussed earlier. People were loading up on one day sizable upside lottery tickets. Obviously, there was a rumor something was going to happen on Friday. So this thing could move in any direction, in any way, shape, or form. So I don't know how I would if I would go size short into short gamma into the earnings announcement. How about you, Uncle Mike, or I'm sorry, Monday Mike?
It's a tough sale for me. If gamma, you want to be long gamma, I might try to do a different kind of trade to take advantage of a long gamma. I'd probably stay away from the weeklies. I'd take a look at buying the December. Oh, I don't know. Which direction did you say you wanted to play it, John? Down or
bullish? Up.
Bullish. Yeah, so I'd take a look at buying the December 17.5 calls. Those are trading for 95 cents. And I would sell the January 20 calls, which are trading around the same, about 93 cents. That'll get you long some gamma. You got a 2.5 point cushion on your naked calls in January. And that's the way I would try to get long gamma. Buy the front month, sell the back month.
So
you could do it with
though.
the weekly too. You could do it with the weekly as well.
Well, if you do it the way he outlines it, though, it's relatively flat on that trade. They're both trading for about the same price. So you can do a no cost diagonal time spread here and take a flyer on that upside for RIMM. Provided this thing doesn't gap up the day after your luck, the day after D's expiration, we're getting gobbled up by Google as well, and it's off to the races, trading 35 before you have a chance to close out that Jan side. Yeah, but I've been amazed at how much crazy short-term upside paper we've been seeing in RIMM lately. So maybe you're not alone in that sentiment. I tend to lean, obviously long-term bearish, like the way a lot of people do in RIMM, but I've kind of been. Once I saw this crazy paper flooding into RIMM, I kind of backed off my plans to and maybe start shortening it going into earnings just because this thing is a bit of a beast. I need to sit back and rethink how I'm going to approach it going in next week. Plus, we haven't listed next week's weeklies yet, which will be the ones I would want to obviously dive in with. So I'm still kind of mulling. I was curious to see if the paper from last week would pay off. It obviously did not. So now it kind of is an open question as to how to position going into RIMM. So we'll watch it for the rest of the week and we'll see what goes on. No reason to position just yet unless you really think something's happening in the near term. I think we got a couple more days on RIMM here before we have to make our final pronouncement going into earnings. All right, I think that is going to do it. A lot of tech-heavy stuff today in the old option block today, but I think it was all interesting stuff. I'd like to thank the cast of characters for joining me on the show today, starting off with good old Mr. Sebas from OptionPit.com. And Mark, what is coming up in the land of Option Pit that may interest our audience?
Oh, all sorts of fun stuff. We actually just rolled out an entire new line of educational products. I think the most exciting is Option Pit Live, which is a combination of a daily market commentary that's about 45 minutes or so to an hour. Our daily strategy letter, which kind of lets people where we're putting on trades that people can kind of follow along with and see what we're doing, as well as access to our message boards and different things like that. I think that's a really new, exciting product. And we're actually, Mark, you'll like this. I was in a class on Saturday teaching VIX, and I said, hey, everyone here knows the put-call parity formula. And nobody knew the put-call parity formula, and which drives me nuts.
Were these just average retail people, or who were you talking to?
They're taking an advanced VIX class, and some are institutional. And
it doesn't surprise me at all.
Yeah, well, no, it doesn't surprise me, but it disappointed me. We're rolling out our Option Pit Silver course, which is a course on it's for. In one sense, it's for beginners because it really takes things from the beginning. But in another sense, it's for all traders because, especially the retail public, it is going to give you a real basis for how options are priced and the real kind of the gearing for how options work. And that's what's really cool and important about it. So, and I think that's something that I think makes a lot of sense. And it's something that every retail trader should do. And on top of that, we made it extra cheap, and it comes with a free month of Option Pit Live if you can pass the test at the end.
If you can throw in a Slinky, I'm in there, baby.
I will get. You know what? I will give you a Slinky. I've got 500 Option Pit branded Slinkies at my office.
I'm sure the little man will love it. All right, Mr. Sebastian.
If he's not screaming, crying in the background, that is.
That's true. Thank you for that, Mr. Sebastian. And now, Monday, Mike, same question to you, sir. I know you guys are rejiggering the old webinar structure over there. So what's the latest coming up from KYO?
Yeah, we're going to rejigger the webinar schedule. We've got our holiday party coming up. Everybody's looking forward to that. December 16th.
My invite must have been lost in the mail. I don't recall the gilded messenger arriving at my door to present me.
You should have gotten one. If not, I'll make sure you do. Yeah, and then we're playing with the Wheel of Fun, spinning the Wheel of Fun every day. You know, we're looking for people that are looking for, you know, any kind of yield that they're not comfortable with getting now. And, you know, we're looking at selling cash secured puts, taking the stock, and then selling calls against it. So we are accepting new clients for the Wheel of Fun.
Just change it from KYO to Wheel of Fun Inc.
There you go.
Might get a whole new class of clientele coming in on that one. All right, and Mr. Grigus, what is coming up in the land of OX that may intrigue our listeners?
Well, I got a little developer asking me questions because we're creating like a little extend light for a little bit. People who want a little bit more quicker response when trading options and stock. There'll be a bare bones version of extend. And let's see, on the event side, we're going to be down in El Paso, Dallas, Texas on the weekend of January 14th.
So they're actually making a lighter version of Extend, and this is still for desktops. This isn't for mobile or anything like that, right? This is still going to be two versions of Extend.
Correct. It's going to be on the desktop. We'll also have the iPad and the mobile out there. I'm not sure if we're still supporting RIMM, but
there you go. That's your answer, bullish or bearish. There you go.
But no, that's in the works, probably 6 months out.
Interesting. I don't know if I would have a need for I guess. You know, I think Extend is pretty decent in terms of the balance of functionality and speed that you can get with it. I suppose maybe they could streamline it a little bit to make it a little faster. I don't know if I need a reduced functionality version, though. I probably would lean the opposite way. I would say, hey, add some things to make it easier to do complex spreads and stuff like that. But I guess some people who want to get stuff off pretty quick, maybe they have limited resources on their home PC. Of course, there's an Air application. It shouldn't be pretty heavy on your machine, you know? I don't know, interesting stuff. Tell them by all means to, since you're talking to the devs and you have their Air, by all means, tell them to incorporate the old Option Block RSS feed into the mobile app. That should be their highest priority.
It should. I know it's mine.
There you go. Your voice carries weight there, sir. Get it done, as they say. All right, that is going to do it for this episode of The Option Block. I want to thank all of our listeners out there for downloading and streaming and subscribing to the program and making it such a success. And we'll see you all on Thursday right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.